What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session where we had this really nice 5R setup. We had red folder news drop earlier on in the session and this created quite a complex entry model here. So this is not a trade that I've actually taken, but in hindsight I can see the confluences have lined up which would have generated a really good profit. Let's jump into the high time frame analysis now and see how this potential setup could have been identified in live time. Here we are in our 15-minute chart to start our analysis. So we can see the extended green lines showing us untapped levels of session liquidity. I'm using the session liquidity tracker indicator for TradingView. Links to all of the indicators I use are down in the description box below, so if you want to replicate my charts you can find details down there. We can see we've got yesterday's daily high, which was put in the New York AM session just above us here. So it looks like price is displacing, reaching toward that. We've got a fair value gap created just as Asia's closing, coming into London at 1 AM is where we're going to be starting our analysis, and we can see that price is reaching up towards this untapped previous daily high liquidity. We've got Asia low here, but we can also see the Asia trading window here. This is the ultimate Asia low, however we have generated relative equal lows inside this range. So I would be keen to highlight those levels. We'll go with the lowest one there. So we've got sell side at the bottom of there. And we've obviously left a 15-minute fair value gap at this point. Something to be aware of, relative equal lows going into the fair value gap, so potential sweep of liquidity there. I'll just mark these out as equal, so we know that we've got some equal lows going into a fair value gap on the 15-minute chart. Obviously relative equal highs here, 2 pins going up to create the previous daily high there. Now we have got red folder news coming at 2 AM on the pound. Although this is not euro news, the pound news can affect the euro price. Therefore, I will not be taking trades between 145 through to 215. So I don't trade 15 minutes either side of the news. So I'm going to put this little red box here to 15. I won't be taking any trades or any entries inside that box there, because that's the window where I just want to let the news play out and then we'd look for a possible entry after that. So really we're going to be looking for entries after 2:15 today. We do need to be aware we've got red folder news in the New York session this afternoon, so that may affect price. So I will be quite aggressive with any potential entries, get in, take profit, get risk free as quick as possible. We'll drop onto a lower time frame now, and what we're keeping our eyes on is price hopefully sweeping previous day's high for a reversal. That's what it looks like. However, if we do reverse here and come lower, I would look for a long position gain, anticipating that we're going to take out this high because we are getting quite close to it now. So we're monitoring price from 1 AM. This is when I start my trading window. And this is the open of a brand new 4-hour candle, which can bring an injection of volume. So I will be monitoring price there, but as I say, because of the news, I'm not expecting any entries until after 2:15, 2:30 really. So London opens. We are displacing, so we're continuing the move towards the high. So this is now into that no trade zone for me because we're expecting a news drop at 2 AM. We can just skip through this and watch how price reacts. So that's why we don't trade it. So we have one large candle. It's taken the previous day's high out for us. It's also taken the liquidity low there. So that's why I don't want to be in any trades at this point. I'm going to drop to the 1 minute now. I'm going to scroll back. I'm just going to drop a level across the previous day's high so we can see how we're going to be trading around the previous day's high. So the news drop has essentially created a little bit of a large range here. Generated a wick to the bottom and a wick high. So we want to see how price is going to react inside this zone, and we really want to see a sweep outside of it if we're going to be looking for a trade. You can see we're currently just consolidating inside that news drop price action. We've swept one side of the news candle, so we could potentially look for a long to take that, but as we're high up, we've taken previous day's high. I'm not really going to be looking for a long position. I'm expecting a reversal. We're closing back inside the range, so I'm looking for a reason to get short now. We've got these relative equal lows that we created in the gap between the Asia and the New York session above that 15-minute fair value gap. So I'm looking for a reason to get short, to be honest with you. Having swept the previous day's high, we're now closing back inside the previous day's range. We have the relative equal lows created during the Asia session, so a really strong draw on liquidity. A real nice take profit is these equal lows into this 15-minute fair value gap. I'm looking for a reason to get short. We've just come into the 230 candle here, so the new 15-minute candle. There's nothing happening here, so I'm not interested in anything at this point. I'm looking at 2:45 potentially, or 3 AM. Price is displacing, so we're going for the high now. So we've swept one side of the news drop, reaching for the other side of the news drop. We've just pinned through it there. So we've taken the high. Time is 2:41. So if we're looking now for a reversal at this point, our breaker structure is this here. Let's just zoom in on this price action. So we've swept the high. If we're looking for a 2022 model, the break of structure will be sweeping this, leaving a fair value gap for an entry to come short. Time wise 2:45, yeah, so we're into a new 15-minute candle. And just consolidating above that high. Okay, so we do get displacement back into the range, so we have closed over that. So that's nice. So what we've left here is we have left a big bearish fair value gap. In fact, let me turn on a fair value gap indicator. For some reason, the Nephew Sam fair value gap indicator that I use isn't working on replay mode. I'll switch this one on. There we go, this is showing us better. So we had a bullish fair value gap here, and we've left a bearish fair value gap. So we've potentially got, well, it's not potential, we've definitely got an inversion fair value gap at this point, because this bullish fair value gap has failed. So there's one indication that we're getting a reversal. We've had a break of structure, there's the second. Obviously we got a bearish fair value gap at this point. I'm just going to change the color of that to red. And then we have got a very small area where these two are overlapping. So we've got a bullish fair value gap followed by a bearish fair value gap. Where these two overlap is our balanced price range. It's a highly sensitive area, so massive inefficiency here where price hasn't had the chance to balance this range. So when it comes back into this area and does rebalance it, we can often find a strong reaction down. So I'm going to mark that as a balanced price range. Time-wise, 2:52. I'm really looking for something around 3 AM. I want to time the entry with the open of the new hourly candle, which is also the silver bullet hour. And I'm expecting a pullback into this range, coming for, first of all, these equal lows that we've identified between the gap time between Asia and New York, and then ultimately running down to take out those equal lows from the Asia session. .53, let's just drop a line on 3 AM. There we go, so we know where 3 AM is. That's where we're looking for an entry. So coming back, we've tapped the balanced price range now, so that's a nice tap. There could have been an entry at that point with a stop loss above the high if you were really, really aggressive. That is a valid entry in my opinion. I'm waiting for 3. Further confirmation here is this big engulfing candle. So we've engulfed these two bullish candles here with one bearish candle. So you can see if we're just looking at the candles, the bearish candles are significantly larger now than the bullish candles around them. So this is showing us that bearish displacement, a sell program, is possibly in order. Again, we're closing back into previous day's range as well. We're coming up to this 3 AM. So we've closed outside of this area. So these up closed candles now that we've broken below, so we've swept these lows in this fair value gap, we've closed through this bullish fair value gap. These now are an order block. And at 3 AM, coming into the silver bullet hour, the open of the new hourly candle, we've got another engulfing candle. So we've got confirmations here that the balanced price range is held. It's repelled price once, it's come back for a second tap at 3 AM with an engulfing candle. We've now got this order block area. You could look at these two or these two, either of which are a valid order block, essentially very similar size. The entry based on now expecting an injection of volume would be at the bottom of the order block, targeting take profit 1, the top of this fair value gap. Your stop loss, I will put the stop loss above this swing high, because this is the candle that rejected the balanced price range. I would expect this candle to hold. Now we've created a lower high, so I think that that would give us enough breathing room. Another candle, so we've created a bearish fair value gap here as well. We've now got this down to here. So this is a bearish fair value gap. So we've got a bearish fair value gap into an order block. We've had a break of structure here. We've had another break of structure down here now. We've rejected off a balanced price range. We've got the open of the silver bullet hour, so an injection of volume is expected. We've got a fair value gap. So entry, bottom of this order block, or as we tap the fair value gap, either would be valid in my opinion. Stop loss above the highs, so the stop loss could be above this candle. For the fair value gap, I think you might as well just leave it a little bit higher up, give yourself a bit of breathing space, targeting top of that 15-minute fair value gap, sweeping these equal lows. So there's the tap in, so we do pull back into the fair value gap, into the order block. Coming up again, we're back into that inversion fair value gap. And then price is now rejecting nicely. So quite a significant bit of drawdown there to start with. However, we are now getting the volume. You can see we've swept these equal lows here that we'd created. So there may have potentially been a good TP1. We'll hold ours for the top of the 15-minute fair value gap because I think that's a stronger draw on liquidity. As you can see, we are respecting bearish fair value gaps. So even though we've got this consolidation, we're hovering above liquidity. So our expected draw on liquidity was this level. We're kind of hovering above this, but we're respecting this 50% of this bearish fair value gap. And then price drives now coming into a new half-hour candle. So we're coming into 3:30. We've taken this liquidity. There's TP1 hit, so we're now risk-free. Take 50%, 60% of the trade-off, whatever you like. It's a solid 2.3R. We've also got this engineered liquidity here, multiple equal lows. So that will be your ultimate target for a solid 5R trade. Price has flipped through the 15-minute fair value gap, so we now hope that this turns into an inversion fair value gap. We don't really want to see price closing back above this. Let's see how price reacts. But yeah, we're back into the fair value gap engulfment there, so it is currently pushing price lower. That's nice to see. So now that 15-minute fair value gap is acting as resistance. Targeting these lows and just coming up to the end of the silver bullet hour. 59. And then we literally hit take profit just as the hourly candle closes. So a pretty solid trade there, 5R. Complex entry, I think you need to be on ball, spotting these fair value gaps, balanced price ranges, breaks of structure, identifying the order blocks. The key thing for me that really stands out is this injection of volume at 3 AM. So the open of the new hour, we've had a break of structure. The new hour opens with a big engulfment candle, leaving a bearish fair value gap into an order block as well. That's really what will give me confirmation. And we are back inside the previous day's range. So we failed to displace above previous day's high. We've closed back in the range. Now with this in mind, if you really wanted to hold these longer, you could expect previous day's low to get taken. However, we have got news, so I'm not sure how realistic a target that would be. But where would that be? I mean, yeah, you're back into new week opening gap. Interesting to see where this does end up. You could have really caught the high of the day here, and price pulls back to take previous day's low out for a monster 20-hour trade. So yeah, it'd be interesting to see how that plays out. We are engineering liquidity here. You can see this trend line liquidity here, so it wouldn't surprise me if price does come back into this just to take out all of the profitable traders that got in on this move. There's a solid 5R. I hope that was useful for you. Certainly highlights a few things for myself, so we'll come back and review this again in the future, I think, just to be able to execute this kind of stuff more accurately in live time. If you did like the video, please leave it a thumbs up. If you got any questions, leave them down in the comments section below, and consider subscribing if you're enjoying this content, because I am dropping videos like this every single day. Thanks for watching, and I'll see you again in the next video.